Welcome to Drastic Real Estate. Grab a drink and enjoy the show.
Hey there, welcome to episode 62 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband, and we finally got the rails back on here. We're a little bit tough start, but we got it going. How's it going, Jay?
It is going well. I'm excited. I'm going to see you guys in person in, 24 hours.
Whoop, whoop.
Limitless, Dallas. If anybody that's listening is there, come check us out. We're going to be recording a podcast, I think, Thursday night. We don't know exactly what time or exactly where, but find me. I'll let you know.
Follow Jay or AJ on Instagram. I'm sure they'll do some sort of live or post or be like a little scavenger hunt. Come find us. AJ, how's it going, man?
It's going good. How you doing, buddy?
Actually, I forgot. Jay, are you drinking tonight?
I am drinking. I pulled out the Knob Creek, the smoked maple bourbon, and I'm going to be drinking a lot of it tonight. I feel like this episode is going to require a good amount of drink.
Ready to go? Well, I find that smoked maple, you could have like one and then it gets a little bit too sweet, but that first one's pretty good. AJ, sorry. Do I see you switched back to the red Solo cup? Is that what I see in the corner there?
It is.
Wow. Big
back
news.
to the original.
Jay, you brought one of those massive ice cubes again where it takes up the whole glass. You have like half a shot of alcohol in there.
I have actually a decent amount of alcohol in here, but yes, it's the only glass I have that fits this ice cube.
Sounds like an ice cube problem, not a glass problem. Mauricio, what's up?
What's going on?
Looking snappy today, like nice.
A lot of people have been commenting about this. By the way, if you're at Limitless, you're going to see this jacket a lot. I'm bringing it over, and it's probably all I'm going to wear. So I'll just
Is this
change
a test
the
run?
shirt.
You're testing it out right now.
Yeah. So I'm doing good. I leave bright and early tomorrow to Dallas for Limitless, and hopefully I can avoid you guys and not see you as much. But
You're trying to. We're trying to schedule this podcast, and you're like, I can't do it all day Thursday. I can't do it all day Friday, and Saturday I can't do it either. So we either have Thursday night or Friday night. That's all you get.
well, I was thinking about doing it in the morning, but then it would just be coffee and Kahlua or something. I don't know.
He's going to be hanging out with his real friends.
Oh, that's right.
Limitless.
He's got Ken and Robert, and
I'm going to be promoting. I'm not going to promote it here, but I'm going to be promoting legal strategies for everyone at the event. So we had so here's what I'm drinking. We had my sister-in-law's birthday over the weekend, a little pool party, and we had a little extra Sonoma Cutter today, a little leftover Sonoma Cutter. If you're into really over oaked and over buttery Chardonnay, that's for you.
so what, are you into that? You're saying like you aren't, but yet you're drinking.
It's delicious. No, I'm absolutely into it. I love an overly oaked, overly buttered, but you just got to acknowledge it and embrace it.
Cool. All right. Well,
What are you drinking, Kyle?
I usually try and do something clever, but I'm just going to say I'm drinking clear again. I love this shit. Tastes good. I can't even put it in the, I thought about putting it in the fridge in my bar. I got a little mini fridge in my office. And I was like, I can't do that. It would just be like, I would just grab them in the middle of the day because they just taste good. And I would be in trouble. So anyway, that's what I'm drinking.
Can we get some in Dallas so we can taste it?
I don't know if they do Texas. Maybe we should do that. Let's look into that. Jay, put a note.
I'll see if I can get them to ship us some.
Should we be encouraging listeners who are going to come see the show live to bring us some kind of drink?
Yes, come bearing gifts. You'll be like little baby Jesus, and we'll have people show up with bearing gifts, and you could just sit there and they could present them to you.
And whoever brings the best.
You do understand that Jesus didn't bring the gifts, right?
No, I'm saying he could be baby Jesus, and people will bring him gifts.
Oh, okay, that makes more sense. Mauricio?
I'm the Jewish one. I think I'm the baby Jesus. I'm the Jewish one.
But no.
Mauricio's more Jewish than you are, Jay. Come on.
Probably. Okay, let's get going.
All right, should we get this going?
Yeah.
I'm going to start this episode with a quote. The time has come for policy to adjust. Quote of the week, guys. I don't know if you saw this, but two major events in the economy last week. We had the Fed annual meeting happening in Jackson Hole, and we had annual revisions to the jobs numbers. And that's where Fed Chair Jerome Powell basically came out and said, we're cutting, baby. So anyway, but before we get to that, Jay, I want you to walk through some of these things with your economic update and start with the jobs revision, because the jobs guys were finally called out on their bullshit, and they were called out by themselves by revising their own numbers. So Jay, why don't you tell us about it?
Yeah, well, first I need to prove that I'm well read. So you started the quote, the time has come for policy to adjust. But do you know what the next line is? The direction of travel is clear. So we have a clear direction of travel for the Fed. Yeah, we'll talk about that in a minute. But as you mentioned, jobs numbers, I know you're going to want to gloat about this, Kyle. So I'll be quick and then I'll pass it back to you so you can gloat. But basically, jobs numbers were revised down a massive amount, 800,000 jobs over the last 12 months.
How much?
800,000, 818,000 to be specific.
Okay. So like 68,000 per month.
Yeah, something like 68,000 per month. And that goes back to March. So that doesn't count any revisions that we may have seen April, May, June, and July.
Which are estimated to be over 1 million.
Over 1 million total. Yeah, that would not be.
And to be clear, these revisions are on top of the already revisions. So the 13 out of the last 14 months that they already revised them down. That's not talking about these. That's talking about they revised them down and now they're revising them down again.
I love how you guys are just like celebrating the softening of the economy here. So
celebrating. I'm trying to say I've been talking about this for 8 months.
Wait. Why is it you? What do you mean I've been talking about this? You mean we've been talking about this.
No. This is Kyle's moment. He has been spilling this crap for how many months? And we're like, we know. And Kyle's like, no, you don't know. It's way over the numbers. And we're like, oh, come on, Kyle. I mean, yeah. And he's like, no, guys, trust me. It's way over. And then they revised it. And Kyle's like, they didn't revise it enough. It's not right.
Yep. So anyway.
He was right. Kyle knocked it out of the park.
Kyle,
thanks, AJ. Now I feel like I don't even have to gloat anymore. I appreciate you, buddy. I'm glad I'm going to see you in like a day and like I'll give you a big hug.
Dang right.
So anyway, total for the year ending March.
Anyway, let me get back to my script and read the teleprompter and continue with my data.
I have no script. I will tell this story in any language you want, in any order you want. I have no script.
Portuguese.
If Jay had to write the scripts for everything that he said, his fingers would bleed.
It's true. So we thought we were at 2.9 million jobs created for the year ending March. We're at 2.1 million, which sounds like a great number. I mean, we created jobs, it's great, but it's a whole lot less than we expected. It's a major revision. That said, Kyle predicted it. I don't think any of us who follow the economy are too terribly surprised. I mean, we talked about this, it was probably 6 months ago, but we talked about the fact that the reason why we're seeing so many revisions down, I mean, we asked the question on an episode 3 or 4 or 5 or 6 months ago, are the books being cooked? I mean, can we trust the numbers? And the reality is, and I said it back then, that when you're in a softening economy, the issue is that a lot of the data that we're getting for jobs are from surveys. And a lot of times people don't turn in their surveys. They don't respond to surveys until they have a more clear picture of what their situation is. And so when we have a softening economy, we tend to see a lot of data coming in late. And when it's a softening economy, that data tends to be worse over time. So it's not surprising that we saw a big number down. The last time we saw a number this high was 2009. So I'm not going to say the same situation. Hopefully we're not in a 2009 situation. But the last time we saw a number this high was 2009 when we saw over 1 million jobs revised down. And so it's just an indication that things are a lot softer than we thought they were.
And this comes down to a lot of the confusion. We had this discussion 4 months ago when we were talking about how the White House was saying how good the economy was. And they were like, all these jobs were created, everything else like that. And I honestly believe that one of the reasons why Biden's poll numbers were so bad was because, and we talked about it at the time, the disconnect between reality and that they were gloating. That they're out telling everybody how well everything's going, but yet people didn't feel like it was. There was this huge disconnect from the numbers or not. And it was like, I kind of think it's like a silent recession. where when you take inflation, the jobs loss, the unaffordability of homes, everything else, a lot of people are like, this is for us, it's not going good. And the job revision number was so huge. I mean, it was so massive that it shows the disconnect that has been going on for 6 months. And I think that that's frustrated everyone, the public, everybody else, when we're being told the economy is doing great and everybody's going, what are you talking about? I have to work all these jobs. Prices have doubled in like a year and we're not getting raises anymore. And it was confusing. I mean, how many episodes have we talked about this on? Because it was so confusing because you're getting two massive stories.
And are you surprised that there hasn't been a bigger reaction though by the market? Because I mean, if you go back, I mean, this is all about this whole expectation policy that either the Fed or the government goes. But like, if we had, to Kyle's point, every single jobs report, 60,000 jobs under what they reported over time, that would have had a much different consequences or reaction from the market. Now that we got it all at once, I feel like they haven't really adjusted much or haven't really responded in a way that you would think they would, assuming that we would have lost $60,000 a month over the last year.
I feel like people still think we're getting a soft landing. Like they still think that we've already committed. Powell already said that we're cutting in September. This jobs number just confirms it. So nothing's changed. Like everything's the same. He's going to cut rates and the economy's just going to keep chugging. We're all going to be fine. And when, some other people are like, no, this is an indication that soft landing's off. Like we're back to hard landing now.
Well, I mean, it's part of the problem is we don't have a definition for soft landing. It's a term that we never really used up until a couple of years ago, and so you're depending on your definition of a soft landing. If your soft landing is there's never going to be a recession again ever, then clearly we're never going to have a soft landing. And so other people would say, well, soft landing meant that we had this 9% inflation a couple of years ago, and here we are 2 years later. Jobs are still, I don't want to say strong, but we're not at 6% unemployment. Inflation is down below 3%. And so in some people's minds, this has been a soft landing. But again, it's never going to be, we're not going to have a recession ever. It's just a question of when that's going to happen. Now, if you dig into the data a little bit on these revisions, what you find is that on the good side, and I'm not saying this is a good thing, it's a horrible thing. The economy is massively softer than what we thought it was. But on the bright side, and there is a somewhat of a silver lining, it's not due to layoffs, which is the typical result or the typical leading indicator of what could be kind of a spiral down of jobs. This is basically employers have hired so much over the last couple of years that they were at full employment and they're slowing down. The economy's slowing down. They're not laying off, but they're not hiring. And so it's more natural attrition of jobs, what we saw of these 800,000 jobs. Not saying that's a good thing still, obviously, but it's not, I don't think this is and I think this is part of why the market reacted the way it did. I don't think that this was kind of alarm bells that we are like getting ready to crash and burn. I think this is just...
The Fed's outlined what a soft landing is. So the Fed outlined that a soft landing is their ability to lower interest rates, to tackle inflation and be able to lower interest rates without rise in unemployment. So that was their definition of it. It was that inflation would be solved without unemployment rising.
Well, I don't think anybody thought that we'd keep unemployment at 3.4%. That's just unreasonable. So is 4% reasonable? Is 4.2, 4.3, 4.4? That's where obviously if we get another 100 basis points, 200 basis points, if we get to 4.4, 4.5, that's clearly above the historic average. At 4.3, we're probably still at near full employment. So the question is, where's the trend going from here? And I think
the problem is we're not at neutral, right? We're not at neutral rates. Like even if he reduces rates by 50 bips in September, we're still not neutral. We're still restrictive. So if we keep waiting, like if you're expecting that all of a sudden, like we don't want this to go above 5%, we gotta get it down to neutral beforehand, so that we can just coast. And
July was 4.3%.
Like we could have 4 5 next time for all we know. Like this could, like if we keep going at this trend, like it's like it could be an issue.
Oh, it spiked. I mean, you're talking, if you go back 3 months ago. So if we look here, I'll share my screen so we can look at it. I'll describe to obviously people that are not. When we look at, here we go, share screen, search. United States unemployment rate. Let's look at it by month. All right. So if you go back to March, we were at 3.8 and July we're at 4.3. I mean, before that, we've been under 4 for how long now? Like how many years? And so when we look at the spike since April, March, the beginning of the year, effectively though, we're going from, 3.7, 3.8 for the last year, all the way up to 4.3 in a matter of just a few months. And it's, I think, what to Kyle's point here, it's the trend. And what Kyle was saying all along, which is important, is by the time, and we've talked about this, they're going to react when they need to, when they have or not when they should. So all of a sudden the trend, even if they start dropping rates, well, then what interest rate will stop unemployment from rising like this? What is that? Is that 5? So how fast do they have to bring it down? And what's the tell? Because the economy doesn't switch like that. And I think that's the concern, is that the trend of unemployment is rising so quickly, yet we haven't even started to cut rates.
You know what other trends though are still going high? We just had an all-time high of medium home prices, right? Food prices are like at an all-time high. Like we still have all these inflationary pressures, which account for a much higher percentage of the average person's, expenses, right? Everybody talks about this inflation number, but at the end of the day, housing, food, and then I think energy's, I haven't looked at it, but it's probably, I'm guessing it's a wash. I mean, I'm looking at gas prices. It's probably a little bit higher than it was when the rate started. But if you look at from the time the Fed started raising rates, and you look at home prices, you look at food prices, and now you look at energy prices, it's not 2%. It's astronomical. It's 25, 30, 40%. So have they really succeeded?
Well, we're kind of shifting into inflation here. So Jay, that's the Fed had their annual meeting at Jackson Hole, and this is typically where they want to announce like major shifts in policy, and that's where I got that major quote, because you saw it on every single one of the news outlets about basically locking in a September cut. So Jay, why don't you walk us through what happened there, because I feel like that speaks a lot to what they believe is happening with inflation and jobs.
Yeah, so Fed met at Jackson Hole, and Powell made some remarks. This I did write down some notes. When it's quotes, I do write them down. But remember, the Fed has 2 mandates. There are 2 things the Fed is always trying to do. They're trying to keep inflation in check, and they're trying to keep full employment. They're trying to keep the bulk of people who are looking for jobs employed. And so they have a couple of ways that they do that, but the primary one is interest rates. Lowering interest rates risks inflation but helps jobs. Raising interest rates risks jobs but helps inflation, as we've learned over the last couple of years. Powell right now seems to be relatively confident that both are in a pretty good position. So 2 quotes from Powell from his statements a couple days ago. One quote, "My confidence has grown that inflation is on a sustainable path back to 2%. So he's in under the belief that inflation is kind of under control. We're still at close to 3%, but he thinks we're trending down to 2%. So he thinks that that interest rates are likely not too high, obviously. On the other side, he said, quote, "The labor market has cooled considerably from its formerly overheated state." And so this is the first time we've heard that in a while. We've heard that inflation's coming down, but this is the first time that Powell's really said that he feels like jobs are softening to the point where he's comfortable that we're kind of ready to take the next step. And so what's that next step? Well, Kyle, you started the quote. "The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks." So basically what he's saying is clearly the next step is a cut. And while he didn't say it, I think everybody expects that first cut is going to come at the next meeting, which is in September. And then the big question is, are we going to see a 25 basis point cut, a quarter point cut, or are we going to see a half point cut or maybe even more? And so if we look, and I'll pull up my screen here, if we look at kind of the market, the investing market, to see what people think is likely going to happen, what we see is for September, there's about 2/3 of a chance, or 2/3 of investors think that we're going to see a quarter point rate cut, and about a third think we're going to see a half point rate cut. Surprisingly, nobody sees 3/4 or a point. I know some people have been talking about it, but the market's pricing in either a quarter point or a half point. If you go out to December, which is obviously the last meeting of the year, basically what we see is there's about a 70% chance, according to the market, that we're going to see at least a 1 point rate cut, which is kind of crazy. And then 100% chance that we're going to see at least 3/4 of a point rate cut. So clearly,
the rumors are that they're just going to do a quarter point before the election and then wait for the election to happen, to not influence it, and then they can make their major shifts. And I don't really see. I know it's saying a 30% chance of it being a 50 bit, but to me, like, if they do a 50 bit, they're basically admitting that they waited too long, right? That they screwed up. And so I think it's going to take a lot for them to say, "Ooh, okay, we need to do this 50 just to send a statement," because no one really wants to say, "Oh, geez, all right, we might have waited too long on this."
How does that is that going to affect? Let's talk about real estate, because obviously this is a real estate podcast. I mean, is that going to affect real estate at all? Is it going to help the average real estate investor, or
a half a point? No.
Yes, I disagree. And here's why I disagree. I think that spreads on the bank loans, it's going to take some time for spreads to change, but spreads in the bank loans still are pricing in the upside risk, and they're the upside, of a potentially, okay, we could still see inflation come up. It's not as high as it used to be, and spreads have been coming down. But the moment we see those cuts, and if we see significant cuts, an indication that we're going to go down quickly, because one thing you didn't notice is Powell likes to use words like gradual and like things like that. He didn't use any of those words. He didn't make any indication of how quickly or slowly they were going to come down. He kind of just said we're coming down. So to me, yes, a quarter point, it's not going to, that's already priced into the market. To Maurice, or to AJ's point, that's not going to change like the 10-year treasury at all. If we just see a quarter point, that's already priced in. But to me, those banks are all of a sudden, like we've seen historically, like in our commercial loans, I remember a time where banks were given, 140 bips over the indexes, and like that's a long way to go. And so I see it coming down a little bit, just as banks get a little bit more comfort that rates aren't going to go up at any time.
But that was my point, though. It's like in real estate, as you guys know, it's really more closely tied to the 10-year than the overnight Fed rate, right? And so I'm looking at the 10-year, and I see that in April it basically peaked at about 4.7%. It's down to 3.8. I mean, it's already come down significantly. Yeah, it's already priced in. I could argue all day long that there isn't a really strong correlation between the Fed going up and down and the actual 10-year, since the 10-year note is something it's a global market, so there's a lot of other factors going in. But the mortgage rates are going to be based more on the 10-year, and we're at 3.8. It's priced in. I don't know if it's going to make that much of a difference. To me, the 10-year is telling me that people are a little bit more concerned. Rates have been going down steadily since April, which is usually a sign of the opposite of growth and inflation. So it's non-growth and or less of an inflation. That's what the market's telling you.
I think that started 4 months ago.
Yeah, but think of it from a bank's perspective, though. Like if you go back to when things were good, and when you got a deal coming in, you had multiple, like you had dozens of banks sometimes kind of giving you quotes and bidding on your asset and wanting to give you loans. And the problem with what's been going on is now you kind of have to search for it. Like the Fannie and Freddie have kind of just been the standard right now because it's not a competitive market outside of them. You're having, a couple quotes, and most of them don't even compete with Fannie and Freddie. So if all of a sudden we see that, those rate cuts, and we see significant rate cuts, and you take that upside risk off the table, all of a sudden more banks are competing. And if more banks are competing, it's just the nature of competition. People are going to lower their spreads, and we're going to get better loans.
I think there's one other thing to factor in. We still have an inverted yield curve. We're pretty close. I think I looked earlier today that the 2 and 10 are within 60 basis points. So we're not that, or maybe it's even 6 basis points. I don't remember, but it's really small, the 2 and 10 spread, but we're still inverted. And so I think as long as the curve is inverted, that's just an indication that investors are confused about where things are going. I think that means that we can't necessarily expect that we're going to see historical trends in terms of correlations between assets and investments, because investors don't really know where to put their money and how to make those correlations right now. And so I'm not so sure that we're going to see historical deltas between things like federal funds rate and 10-year treasury and 10-year treasury and MBS and mortgage rates and all of these things that we have really good data for historically. But as long as the yield curve's inverted, it just tells me that investors aren't acting completely rationally, and we shouldn't necessarily expect all those things to revert back to historical norms.
But if we saw a 50 bip reduction, wouldn't you say that would uninvert that, that alone?
It's interesting. I don't think anybody knows what'll get it to uninvert. I would think that should have some bearing, because it provides some level of confidence in where the Fed is heading and where likely the economy is heading over the next couple of years. And confidence is ultimately what it's going to take for some sense of certainty by investors is what it's going to take for the yield curve to uninvert.
It's absolutely going to uninvert, because the Fed rate will affect the 2-year much more. So if the Fed funds rate goes from 5.25 to 5 to 4, then the 2-year is going to go down. So it's going to uninvert that way. But that's not the good uninversion. The good uninversion is when the long end of the term actually goes higher. So what you want to be seeing is a 10-year treasury going from 3.8 to 4 to 5 to 6. That's how a good economy would uninvert. This is the opposite. So the uninversion is actually when the recession happens. Ironically, it's like the curve.
I don't mind 3.8 as a number though. I don't really see that. If you look at where the Fed wants to land with their rates, we're still above that. So I don't mind that as a number. I don't think that's too low.
Yeah, but you're under the assumption that the Fed can control everything and just manipulate and turn these levers, and somehow it's going to actually land exactly what. I know what the Fed wants to do, but the idea that they can actually just move levers and nail it, like Simone Biles.
Other things are going on in the economy. They have fear. People are buying bonds, right? So a lot of times, to Mauricio's point, you've got other things that are happening that are moving those investors, those bonds, everything else, as the Fed is trying to react within it. And a lot of times those things aren't correlated.
Yeah, if you look at a graph, I should have pulled it up. If you look at a graph of the Fed funds rate moving up and down and superimpose it with the actual 10-year, there's very little correlation.
Well, we've had 50 bip swings, and the Fed fund rates hasn't changed at all over the last 4 months. So
yeah, I think so. So here's the takeaway. I was saying a couple weeks ago, just before the last Fed meeting, that I thought the Fed was behind the curve. I'm surprised they didn't cut in July. This is indication to me that everybody talks about. So the Fed's got to have advance notice on a lot of this data that's coming out. They've got to know what the jobs data is. They got to know what the GDP data is.
I don't think they do.
Well, maybe they do, but here's the thing. I'd have to think that if the Fed knew back in July, a month ago, that we were going to see 1 million or 800,000 revision in jobs, that they wouldn't have waited till September, that they would have done just a kind of a precautionary cut in July, and they didn't. So that tells me that either they didn't know or they have some other plan. But regardless, I think at this point, Kyle, I agree with you. The Fed is behind the curve, meaning the Fed should have lowered rates by now. We're way too high. We're pushing inflation down, which is good, but we may be pushing it down too much and we may have overcorrected and may have waited too long. That said, Powell is kind of
the
patting.
problem with that, though, guys, is we're assuming that inflation is correlated to jobs. That's not true. So this is the problem the Fed gets in. It's not like, oh, okay, we have job losses. That automatically means inflation's going up. So if we're having job losses, we should just cut rates because inflation's solved. That's not how it works.
What do you mean,
And so-
AJ? There's a whole curve named after that, isn't there?
Yep. The Robert, what is it? The Robert, I was thinking of the
I forget
curve.
what it's called.
Yeah. Have we ever had times when inflation went up and so did job rates? Or
Well,
unemployment?
it was never, the reason we can't think of it is because no one even thought it was like a thing. Like it was like debunked like 30 years ago, but they just brought it back up because it supported their argument when they were trying to make moves this time.
The Phillips curve, the Phillips curve, the Phillips
curve, yeah.
Long story short, we're likely behind the curve. We're going to see at least 1 or 2 or 3 cuts before the end of the year. And at the same time, we've got Jerome Powell patting himself on the back. I'll end this section with one last quote before we move on from Powell at Jackson Hole, where he said, with a quote, "With an appropriate dialing back of policy restraint, there's good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market." So basically what Powell is saying is at this point, and whether he believes this or not, we can argue, but he believes that we're still in a point where the Fed can kind of successfully land this economy while maintaining both sides of their mandate, inflation and jobs, successfully.
How much is he kicking himself for throwing out that 2% number? Like there was no reason to do that. He could have given a range. No one was going to say, "Oh no, we need an exact number." Like he could have said, "Oh, 2 to 3."
That's the ironic thing. We talked about this, and a lot of people think that 2% number is kind of the holy grail. But what they don't realize, and I've had this discussion on social media a few times recently, that 2% isn't necessarily the holy grail. It's not necessarily the quote unquote healthy number for inflation. The reason 2% was thrown out, not because inflation was too high and he was trying to get it down to 2%. This was during like the Obama administration after 2008, 9, 10, when inflation was too low. We were at 1.1, 1.2, 1.3% inflation, and the Fed was concerned that inflation wasn't high enough. And so he set the 2% target to give cover for them to raise or to lower rates and keep rates lower for longer in order to get inflation up. And so I think at the time he didn't think through the ramifications, because had he done that, he would have done either a range. He would have said 2 to 3%, or he would have said 2.5%. But I think at that time they were so desperate to get inflation up that he didn't even think about the future where inflation was too high.
I'll pull it up for next episode, but I'm pretty sure that 2% came from some Australian central bank.
Yeah, it was like New Zealand or something.
Yeah,
Economist.
New Zealand or something back in the day, but we'll find the story. Hey, I have a motion to make. I think the next time the Fed does a meeting in Jackson Hole, I think we should do a live podcast from Jackson Hole.
Why, you getting an invite there?
Yeah, we'll take AJ's private jet and we'll jet over there and hang out with the boys,
with all the billionaires. That'll be fun. Jay, anything else real estate investors should be keeping an eye on here? Or?
Yeah, so let me throw out a couple more things that might be of interest as long as we're on the topic. From a housing standpoint, things are still hot. So we saw new home sale numbers come in last week, 730,000 in July, which was above the forecast. So we're selling a lot of new houses. Pending home sales are basically flattening out. So we're still selling existing houses. Case-Shiller came out, I think it was today, and we've hit an all-time high. I'm not going to bring up the chart because you can imagine what the chart looks like, but we've hit an all-time high on housing prices as of, I think that was the June number. So, I mean, housing is still on fire, despite what the other things we're seeing in the economy. And then last thing I'll mention is GDP, because a lot of people are wondering what's going on with GDP. They did a revision to GDP for Q2. Actually, no revision. They announced no revision in Q2. So we're still at I think it was 2.8% in Q2. But the Q3 GDP number, so July, August, September, we're about 2/3 of the way through Q3. As of last week, the prediction was about 2.8% by the Atlanta Fed, and they revised that down to 2% as of this week. So clearly, the Fed thinks that GDP for Q3 is a little bit lower than what they were thinking a couple weeks ago. The range that other economists are putting on GDP for Q3 is somewhere between about 1 and 2.5%. So probably
It's
lower.
a big range.
It's a big range. I mean, that's the consensus. So they take the low and the high number and they say this is the range. And so there's always going to be outliers. Those are the outliers. But long story short, it's very likely that GDP for Q3 is going to be lower than the Q2 number, which was 2.8%, but probably still well above 1%. So we're not going to be in that negative GDP range. So that's
Right, so GDP is
kinda where
either
we
going
are.
to be good or bad. Got it.
It's not going to be bad. It's either going to be average.
1% wouldn't be bad.
I mean, 1% would be disappointing. I think again, 1% is the low end of the range. If we're at 1%, I think you could call that the bad side of the range. But I mean, it's not negative GDP. It's not the economy.
Sounds like your wife. This is how your wife makes excuses for you. It wasn't bad. It would just say it's disappointing.
you were on the low end of the range.
We do have PCE coming out on Friday too. Hopefully no one overreacts like the same way they did with jobs here. Because actually, I don't know. I was seeing that the predictions might come in a little bit high. So hopefully, if we see a high PCE, people don't freak out. Because I'm kind of over these people freaking out every time we have a release, especially the jobs releases. Because now we know for certain it's bullshit. We good here? Move on to our main topic.
So we've been going for over 40 minutes. Are we now going to introduce these other topics?
I mean, I guess I'll take this one. This is my bad, guys. My bad. I thought we could do just a little economic update up front, but I forgot that Jay runs the economic updates.
Like, I literally don't know how we're going to do this in under 2.5 hours.
Well,
I'm not kidding.
As long as we keep it interesting,
we do an economic update every single week. So just a 1 week difference economic update took us.
Well, we didn't do one
months.
last week though. AJ, it was the problem. We had to catch up.
2 week economic update,
and it was a big week. It was a big week.
The good news is that when we talk about my section, like half of my section we talked about last week, so we can just cut that out.
We just wasted another minute.
We could just do half of it, and we could do the other half.
Let's do it. No, we're powering through.
Well, so as Mauricio alluded to, last week we went through Vice President Harris's housing plan, but it was just a small sliver of her overall economic plan. This week we thought we would go through what the rest of her administration is having as a proposal and contrast it against her rival, President Trump, and his economic proposals. So who wants to go first? We're going to start with Mauricio. Why don't you take a look at what else Harris is proposing?
I'm going to come right out of the gate with the most controversial, most unlikely to pass hit in the news this week, and that is the tax on unrealized gains. Now, before AJ gets super pumped and, red-faced and just, boiled, I wanted to actually go through that policy to make sure we all understand, because there's been a lot of stuff going on about what it is, what it isn't. So let's just at least get the facts straight first, and then we can debate whether this is a good idea, a bad idea, or what have you. So Vice President Harris came up with this idea to tax unrealized gains, but it only applies to individuals that have over $100 million in wealth, which really is net worth because it's assets minus liabilities, that do not pay at least 25%. So what they want to do is almost put like a minimum 25% tax on these folks on income, although income is defined as actual income and your unrealized capital gains, right? And so you would pay 25% every year. I believe at the beginning you've got about 8 or 9 years or 10 years actually to pay that bill, since it's going to be a pretty high bill. But every year you'd calculate your income of actual income plus unrealized gains, and then you would pay a tax. The important thing, though, in addition to the $100 million mark to understand, is that this only applies if more than 80% of your wealth is in what they call liquid assets, which means tradable securities or tradable stocks. So if you're Elon Musk would be a great example. Like he's got all these, I don't know how many hundreds of thousands of shares of Tesla. Like that's something you could easily sell on the market. So if you had to pay the tax, you can just liquidate, no problem. If you're in something a little bit more illiquid, like you're a startup company or you're a real estate investor, for example, that wouldn't apply to you because you couldn't just sell your real estate investment to pay this tax. So you wouldn't, as long as 80% of your shares are not in these illiquid assets. Now, with real estate, it's interesting because what they do is they actually get you some other way, which is you get the choice to defer the tax on this unrealized gains until you actually sell it. So if you're a real estate investor, you wouldn't have to pay the tax on unrealized gains. You would pay the tax when you actually realize the gains when you sell, but there is a 10% deferral tax. So you would actually ultimately have to pay an additional 10% on that capital gains when you do sell it. But essentially what they're trying to do is they're trying to tax unrealized gains for illiquid folks, so that when people like Elon Musk, for example, who got a lot of a bad rap, where instead of actually liquidating their stock, if they want cash, what they end up doing is they get a loan and collateralize that loan against the shares, and that's how they were able to withdraw the cash, withdraw the equity without having to pay any taxes. So that's really what's going on. I've got a lot of beefs with this, by the way. Obviously, this is not something that I would generally support, but I think if you really wanted to be honest about this and really wanted to attack the perceived root of the problem, you would change the tax on the actual loan from the shares, right? So if you're somebody like Elon Musk, for example, who has all these billions of dollars, or any company, right? And instead of selling the shares and realizing a gain, you'd get a loan against it. Well, right now that loan is not taxed because you don't tax loans, right? But if you actually institute a tax on the loan piece, you would at least be addressing the major concern that people have, which is like it's unrealized gains, you don't pay taxes, but people still get an economic benefit from that tax. So
that's a slippery slope though, because then like if we get a loan on a piece of real estate, are we paying tax on that? Like you're basically any collateralized loan would apply in that kind of case.
Yeah, because you can think about it as like a loan is really extracting a piece of the equity of that property. You're just not selling.
No, it's not, because you have to pay it back. If it was extracting equity on it, you're
Right.
also not only paying it back, you're paying it back at a premium. You have to pay for the rights to do that.
At a minimum interest rate as
loans are not
required by law.
extracting equity.
Right. And so the idea here is that obviously at some point you would get a credit if you end up selling this thing. If the property then goes down in value at the time that you're realizing the gains, you would get a credit for it, and eventually you would be able to get a refund if that happened, on the back end. But anyway, that's Vice President Harris's proposal.
So these people that even I know most people don't. They only read the headlines and they say, "Oh, don't take our money." But like, so my question is, if they're going to tax unrealized gains, are they going to pay us for unrealized losses?
So can I jump in here? And my goal tonight is going to be to piss off everybody that's listening on both sides. But at the same time, I really I appreciate the fact that Mauricio is trying to bring some nuance to this discussion and not just start yelling socialism or the other side fascism.
Well, it's pretty generally accepted that real estate investors are going to hate democratic fiscal policies.
Yeah, let's be clear.
Doesn't matter who puts it up.
Half the people listening to this are going to yell socialist at one side. The other half are going to yell fascist at the other side. And the reality is, I don't think either of those apply when we're talking about the economic policies for the candidates. I'm going to talk about regulation on one side of the aisle tonight, and I'm going to talk about inflation on the other side of the aisle. But I don't think this is socialism or fascism on either side. But let me say this. To your point, Kyle, about do we get a rebate on unrealized losses? This is the point of the proposal. The point of the proposal was exactly what Mauricio said, which was that centimillionaires, billionaires have this advantage over the rest of us, and that's that they have this way that they can take money out tax-free, presumably until the day they die, and never pay tax on it. And so what the goal of this unrealized gains tax is, it's to not
How do they have an advantage that we don't?
Most people don't have any assets to borrow against.
Lots of people have assets that aren't worth over $100 million. That's not, and they all have those advantages. I do, every one of you do. If you guys own $10,000, $20,000, $30,000 in stocks, you can do this too.
So it's much harder. Number one. Number two, typically the loans that we get, that regular people get, have some term. So they're 2-year loans or 5-year loans or 10-year terms. 10-year terms. when you're talking about somebody like Elon Musk or somebody like Warren Buffett who's borrowing against their stock, there are no terms. Basically, these are individually
You can
negotiated
get a
deals.
revolving line of credit for anything over $1 million that you can replace and extract from any bank, anywhere for your stocks. If you have over $1 million, you can do that.
So let me ask you a question. AJ, you probably have more money than anybody on this panel. Do you do this?
Yes.
And so do you derive any income from capital gains?
Do I drive income from capital gains? If I said depends on the year, but yes, the answer would be I have every year.
And so that's the difference, is that these folks have enough money that they don't ever have to do that they can literally avoid paying any tax forever. And again, I'm not defending.
That's why we invest in real estate. So we do that.
I haven't paid tax. I haven't paid taxes in 10 years.
Federal tax. Idaho has state tax, doesn't it?
Yeah, we have state taxes.
Yes, you still got to pay your state tax.
Let's be clear. I'm not defending. I'm explaining. What I'm saying is, though, there's nothing. Those rules don't not apply to other people. What you saying that they have this unfair advantage that other people, that's not true. The rules are the same for everybody because they can use it at a higher rate. If you have $1 million, okay, so let's say they have a fair advantage. They have an advantage. That's the key. When as you have more assets, as you gain more assets.
But that's advantages of being successful, not advantages because the tax code says you're rich, so I'm going to give you something that other people don't have. That does not exist. There's not a special rule for 100.
Don't change the tax code. Change the rules with the bank that they have to offer the same thing to everybody. Like that.
And once again, they do for anyone. If you have $1 million, you can get a revolving credit line on your stocks. Like you can do that. This isn't something for people that have 100 million or more. It doesn't exist.
Let me get to my point.
The average American who makes $60,000 a year doesn't have $1 million in stocks, right? They barely have $500.
Then these rules don't apply to them. So why does that matter? What you're saying is they have rules that the other people don't, just like every single person in every single different status. Those people, Mauricio, also don't pay taxes.
100%. Bottom 50%.
Let me get to my point. We are not, by virtue of this bill, and again, I do not support this bill. I think this is a horrendous bill, but I am trying to explain the justification behind it and how it actually works, because I think there are some nuances here that are important. This isn't a new tax for ultra wealthy people. This is the exact same tax that you and I pay, except that it's prepaid. And what they are doing is they are charging this tax on unrealized gains as a way to ensure that those taxes are paid now. If at some point those gains are realized, it's offset by the taxes that are paid. If at some point those gains are lost, if at some point the value of the stock goes down and you sell it for a loss or you sell it for less than the tax you paid, you get a refund.
How do we prepay a tax that they don't have to pay?
Here's the problem. We're spending more time right now talking about this than they spent coming up with this. Like they spitballed something for 10 minutes and they threw it out and they came up. They're like, oh, we got to come up with a threshold though. We want to make it look like we're just coming off the ultra wealthy. So let's go $100 million. And like here's a question. AJ.
That's the point though. That's the point. What I'm saying is there's not the people that are worth 100 million more do not get this secret code that the tax people write for that crap.
No, they just came up with it. They said that makes you ultra wealthy and they should pay more taxes.
Exactly. The only thing that changed was on the government side by picking on those people, but the tax code didn't give them something special. The tax code isn't written to say you get, and we don't pay taxes that they don't have to pay because they have 100 million. That doesn't exist. That's a narrative.
Well, AJ, I have a question for you.
Yes.
How many planes do you personally own in your name?
Wait, no one would ever own a plane.
Exactly. How many planes do your businesses own? 2, right? Your businesses own the planes. Like when you talk about 100, like we could say, oh, Elon Musk is worth, how many $1 billion? Do you think how much of that do you actually think ties back to his personal name? How are you going to implement this? There is absolutely no way that they could figure this out. Like even Elon Musk stock, like I guarantee that's not all just like, okay, that goes to Elon Musk, social security number XYZ. Like it's owned by companies, it's owned by trusts, it's owned by all these different things. There's absolutely no way that they could ever figure this out on ownership and who to tax and whatever. They didn't think it through. And so like Like there's
agree.
no real point in us giving it that much.
Yeah, I agree. Maybe we'll move on after this because
I think it is important to point out though, this is a prepayment on tax, and this isn't a separate tax that other people would pay. It's the same tax you and I would pay, but you have to pay it before you realize the gains as opposed to after you realize the gains to ensure that you actually pay it and you don't die without paying it. Again, I don't agree with it, but I think that's a really important distinction. When people talk about this, they don't recognize that. And I think it's important to recognize that so that we can have a nuanced conversation, so that we can have an
But
intelligent
if it's unrealized, we haven't determined whether it's a gain or a loss. So if it's a loss, are they going to give us a loan? Are they going to give us a check for our losses? Like when I have a depreciation on my real estate, I'm going to be like, hey, I depreciated $100,000. Can you give me 30 grand in taxes on that because I have an unrealized loss?
Yeah, if you're gonna tax gains, you should be giving. Yeah, if you're gonna tax gains, you should be giving credits and deductions for unrealized losses. But the other thing that people don't talk about, and this is why nobody gives it any thought, is the unintended, as always, is the unintended consequences of these policies. Because what's going to end up happening, if let's wave a magic wand and let's just assume this passes. Now Elon Musk, well, shit, I need a bunch of $1 billion to go buy, X and Twitter. I can't take a loan like I did before. So now I got to sell the freaking stock in order to pay for this thing. Well, what happens? Suddenly you got all this selling pressure. Can you imagine the first year this thing passes? Everyone's going to have to sell their liquid assets in order to cover the cost of this thing. There's not going to be a massive sell. The stock market's going to go down.
Mauricio, I actually think it's simpler than that. Elon Musk is just going to expatriate. Like if you start taxing these ultra wealthy billionaires, like
but
stupid amount of money,
because there's an exit.
Wait a second. Let me jump in again, because a lot of people don't realize this. Remember that little tax bill that Trump passed in 2017, the Tax and Jobs Act? Did you know that there's a provision in that act for taxing unrealized gains on multinationals that try and repatriate income? In fact, there was a Supreme Court ruling 2 months ago, Moore versus US, that basically said that it is legal for Congress to impose an unrealized gains tax, and it was challenged based on the unrealized gains tax that was implemented in 2017 in the Tax and Jobs Act. So this isn't something new. It's definitely something that's expanded. I disagreed with it back then. Nobody talked about it. I don't know why, but I disagreed with it back then. I disagree with it now. But the Supreme Court has basically stood up and said, this is constitutional. Congress can impose unrealized gains on whoever they want.
Here's what it comes down to, though. Who do you think gets paid more, an IRS agent or Elon Musk's accountant? It doesn't matter what rule they put in. They're billionaires are always going to not pay taxes. It doesn't matter how you try and screw them. They're always going to figure it out.
100%.
Yeah. The Congress is so far, like they don't even get it. They don't even know how this stuff works. And they're trying to make laws to regulate it.
And by the way, and I want to go to AJ and see the Trump side of this, obviously, because that's the idea. Let's go tit for tat. But that's somewhat correlated to this proposal is also the proposal of taxing capital gains as ordinary income. Again, if you make more than $1 million, that same
the
thing.
Marginal income tax rate is effectively 44.6% across all income types. That is on top. So what the capital gains was on top of that. So to put that in, today's lower top tax rates are 23% on capital gains, 29%. So basically it's setting the effective tax rate clear up to 44.6%.
Right. And if you own real estate and you decide to defer, obviously it's an illiquid asset. So you defer it. When you sell it, you're going to pay capital gains tax. And on top of that, you're going to pay that 10% deferral tax for not paying a thing. So who knows? I don't know if that gets credited, AJ. I don't think the proposal is that detailed, but that's a question I would have.
Well, it is because it's what they did is they accepted the Biden's tax plan. And so in the Biden's tax plan that has been filed is under that plan, the top marginal rate, which she supported for tax rate for individuals would climb to 44.6% across almost all income types, compared to with the lower. High income people would still pay lower tax rate on just some other incomes, but the marginal rates at the top are the ones that matter because it affects all the investment movings, everything else like that.
But the question I had, AJ, that what wasn't clear to me was the top rate capped at 44.6, or is the capital gains 44.6 plus the 10% deferral that you would do if you had to defer the unrealized gains? That's the part I wasn't quite sure.
And they don't ever separate that. So you're right. They don't separate those two things. They don't say if it's capped or if it's on top, but what they do say is that it will be at least the effective is 44.6. And so it's almost a double of the effective tax rate today.
So I think this is important. I think it's a good time to bring this up because we're going to talk about this at some point during this discussion. So Dave, if you can throw this chart up, please. Basically, what we're looking at is a graph of federal receipts or revenue, basically government revenue, tax revenue, as a percentage of GDP over the last 80 years. And what we see is going back to about 1945 to today, that no matter what the tax rate is, and we had tax rates at the highest marginal tax rates at 90% back in the 50s. We've had them as low as what we have now, and capital gains tax at 15%. Regardless of how high the highest tax bracket is or what capital gains taxes are, what we see over the last 80 years is that the government typically collects between 16 and 18% of GDP in total revenue. And the reason for that is exactly what AJ said, which is that billionaires, centimillionaires, decamillionaires, wealthy people are smart. Wealthy people can hire really smart people that can figure out how to work the tax code to lower the amount of money they pay. So regardless, and again, this is 80 years worth of data, regardless of what the government does to try and tax billionaires or 100 millionaires or 10 millionaires, they are going to figure out a way of working around that and not paying more than what they're paying if the taxes were lower. And
but
so
it does have economic consequences because they changed what they do. And that's what we see.
Exactly. And
it's literally, even though they're not collecting more receipts, they're essentially, and I'm going to get some slack from half the people here, but it's like a redistribution, right? Because they're literally collecting, like, I think the plan calls for $5 trillion of collected funds, but they're spending, I think, 6 trillion or 4 trillion, one of the two, but it's very, very even. So it's just a redistribution. They're collecting 5 trillion over here, and they're going to give 5 trillion or 6 trillion or 4 trillion of benefits over here. So they may not be collecting any more money, but they're redistributing that through the economy.
I assume the Democrats believe that they are attracting votes by saying that they're going to tax billionaires. But at the end of the day, it's very simple to look at the data and say that it doesn't work.
AJ, what does Trump have to say about all this?
So he's off on his tariff thing. So I think that's
oh my God, don't get me started. Wait, don't get me started on the tariffs.
Yeah.
Do not get me started on tariffs. I'm going to go.
What do you mean, Mauricio? It's just a tax on other countries. It doesn't affect Americans at all.
Yeah, we don't pay tariffs. It's the other countries, right?
Yeah, exactly.
So the only other thing I did want to say, that real estate side, I don't know if you guys caught this. I didn't catch this last time. But the plan to build houses, the Harris plan, they get rid of deductions, so they penalize investors. Did you guys see that? I didn't see that. They will actually get rid of the deductions and tax benefits that investors can take because they don't want investors buying the house. So they've outlined the penalties for the housing is the reduction in tax benefits that investors can pull. There's even penalties for like how long that they might hold them.
Yeah, because they're trying to dissuade large groups to go out and buy these single family homes. That's what they're trying to do. They're trying to make sure that single family homes are purchased by individuals, not these either. And forget private equity groups, syndicators, like these huge institutions that are buying, not huge, institutions, which could be you and me, buying 10 homes at a time or 3 homes at a time or 20 homes at a time.
It's any investor that owns, I think it was $1 million. $1 million in housing? Are you kidding? That's one house.
Right.
Like some area, Mauricio's area, you can't even buy a house.
You can't even buy a house for $1 million. You can't even do it.
It's a quarter of my house.
Yeah, exactly. It's wild. So Anyways, I didn't read that last time, and I've been going for the last weekend through all these tax stuff, and I was like, I missed that. I apologize. Don't know how I missed that. All right,
It's like they don't understand. If someone has to talk to them about the fact that there's only like when a government wants to, let's say, because we're talking about housing. If a government says we have a shortage in housing, we need to put money into it. There's only two ways they could pay for it. They either pay it from, their tax receipts and their income that they're coming in. Well, I guess they could print money, but they can either pay it from their own money, or they could say, hey, we don't have the money to tackle housing issues. So what we're going to do is we're going to give tax incentives to investors so that they will spend their money to tackle that issue for us. There's only that's the only way they're going to figure it out. So people are all like, oh, these wealthy investors, we can't keep giving them tax breaks. Well, if you stop giving them tax breaks, they're going to stop investing in the things that the government wants. The government right now, by giving tax breaks, can tell where they want them to put their money to fix things in our economy that they think it needs to be fixed. If you take that away, then investors are just going to put money elsewhere, and then that shit's going to blow up again.
Yep. As a reminder to everyone, the tax code is not really about collecting funds. It's more about the government pulling out the tax code to incentivize people to do what they want you to do.
Less than 10% of the tax code has anything to do with paying taxes.
They want you to provide housing for people because that's important to them. They want you to provide jobs. They want you to do this. They want you to do that.
They want you to start small businesses. They want you it's pretty plain to see what they want the average person to do.
It's literally a roadmap. It's a roadmap to what the government wants you to do, and you can take advantage of it or you cannot.
This is one of the things that I found actually similar. So there's a few things, everybody, you can research and go look at it between the two plans, which is so ridiculous to me. But if you go to a great resource is the Tax Foundation. When you look at their partisan, they are very much middle, and their accuracy on reporting is stellar. So they have one of the best reporting accuracies out there. Now, whoever's writing what, there will always be biases, but what they do is they're not really talking about it. They're just putting the information out there. They're not giving opinions necessarily on it, but they'll do like they do a side-by-side comparison. All they do is say, this is the tax, this is the tax. You can expand further into those things if you want to go and look into it. It's really good. It's not this newspaper stuff or news articles that are like, oh, this is crazy. And like to Jay's point, fascist or social, it's not like that. They just simply lay it out. So it's really good. But I found that so with like the Kamala Harris's, it's the clawbacks of deductions for depreciation and interest on rental construction investments. They're clawing back depreciation on the construction investments, which doesn't make sense. And this is something so funny because it's the same thing that I looked back on, like Trump's $300 billion tax hike, essentially what it is, for the proposed 10% tariffs, because it would raise taxes effectively on American consumers. It is an American consumer tax. Because the people that produce it are like, whatever, we pass it through. It doesn't matter. And that is the equivalent of $300 billion a year. And the thing about it, though, is the same thing with you look at Kamala's, where who are you hitting here? First of all, both ends up hitting the consumers. But what they're doing is they're effectively changing the way businesses operate. So when you look at the tax plan for Kamala's and how they buy, what they use, how they get around it, capital shifts. It changes the way it moves through. Investors, if I'm not getting the tax benefits, I'm not going to construct new houses. Well, if you've got to deliver products and you have a business and I'm going to invest in certain products that the American people want, but because of the tariffs, people won't pay those certain prices, we're going to stop making them completely and we're going to move to other products. And this is what you find even in like housing is an easy way that we can all understand this because products vary and people choose them. It's the same thing. We still get hit. But all of a sudden you look and it's not economical any longer between regulations and the cost of goods to build affordable housing. So what do investors do? They build nice housing, right? It's regardless of the administration. We're talking about how money moves. It's simple. We can't do it at profitable. We don't do it. It's the same thing with tariffs. If we can't make money on this and people won't pay because we have $300 billion a year now in increase, businesses stop investing in those sectors. And for America, guess what? We don't make jack. So when you start imposing massive tariffs on other countries with the idea that it's going to come back to the United States, we are not a country that builds, because you can't change the fundamental cost of labor and different things like that. You can't rewrite that. We don't want to. We don't want to be a manufacturing hub. America doesn't want to be a manufacturing hub, because those are low paying, low qualified jobs. Those are developing country jobs. It is wonderful that we can increase what people are being paid by shipping those jobs overseas, while America gets higher paying jobs because everybody's advancing. Tariffs are a tax on products that we have to pay to receive that will change the way that the businesses invest. The end consumers, we pay the tax, and businesses will invest appropriately. So it's that effect where it all sounds good. It sounds really good. China's going to pay for it. No, they're not. China doesn't pay for it.
People forget that, even, first of all, yes, when something from China comes in, there's a tariff in place. We're going to pay for it, number one. Number two, there are other products that are used in the United States that use Chinese products that will then, on the input side, add the cost of producing that thing. And then it's going to artificially benefit US products that then, because there's an increase in demand, they're going to start charging more. But I'll tell you a quick story, which I still to this day remember really clearly. 20 years ago, I still have this car, by the way. It's a 2004. I bought a 2004 Mercedes, which back then was like 50 grand. And that was like, back then 50 grand was a lot of money. That was a Mercedes car. I had a client come in from Taiwan, and I picked him up at the airport, was driving him to the office, and he was commenting about the car. He's like, wow, this is a nice car, this, that, the other. He's like, how much did you pay for it? I'm like, that's like 50 grand or whatever. He said in Taiwan, it was like $120,000 to buy that same car in Taiwan, because there was so much tariffs that they were charging the United States for those to import, or not the United States, sorry, to import Germany, for them to import that product into Taiwan. And so the person that actually gets hurt from that is the consumer, because they, instead of paying $100 for that product, now they got to pay $120 for that product, because that cost is going to get passed along.
Mauricio, I already argued this once with you, and I'm going to do it again. I think the car example is a good example of where tariffs can work. And the reason I say that is because we make a competing product at home. We have American brand cars, and tariffs in that case, yes, they will make a Mercedes-Benz more expensive, but they won't make Ford more expensive. And it encourages people to do and buy and keep things American homegrown.
Why are you as the government controlling what I want to go buy? I want to go buy a freaking Mercedes or a BMW or Toyota or whatever.
It's not just
the idea that we invest in our own people, our own economy, our own country.
That's fine, but I want to have the freedom to go buy whatever the hell I want. If I want to go buy,
you're just going to pay more for a non-American product, and I think that's the way it should be. It's opposite right now. I am going to artificially pay more because the government imposed a tax on me. Everybody else does it. Every other country does it. Like, why can't we do it?
Yes, every country does this. Now, this is actually, I agree with Kyle, where tariffs should be and what they should be made to handle. How the playing field works, we are absolutely on a national level getting abused. Trump was 100% right with that. Other countries are absolutely abusing the United States.
But did two wrongs make a right, though, AJ? Did two wrongs make a right?
Hold on, I'm not done. So some of the tariffs aren't meant to affect you. Do you know why he stated, like, people are like, oh, he wants to raise money through taxing China with a tariff of whatever it was. Hold on, let me get it here. 60%. He's not trying to get tariffs on China for 60%. He is trying to move all global trade away from China, effectively killing their economy. So he is attacking that country. It is not that he's thinking, oh, China's going to pay for it, anything else. And the reason why he's picking on them is because they are doing it to us. So there are some imbalances that are geopolitical things within countries that says, at some point, you're right, two wrongs don't make a mistake. They're not trying to do a wrong. They're trying to kill the other country. it's totally different.
But what is the end result of that? That the bottom line is, as the average American making 60 grand a year, 70 grand a year, that means every time I buy a microwave, every time I might buy a stove, every time I buy some electronics, I'm paying more for that product than I would have if this didn't happen. So
Mauricio, I have a question for you. What's better then? What's better then? So an example like beef, like our dairy industry is highly subsidized. So cattle farmers in our country get subsidies crazy. Like what they produce a gallon of milk for, like that's below, like what we pay is below what the cost is to make it. So they get severely subsidized. So is it better for the government to spend money subsidizing our people at home, or to put tariffs on the other side? Like either way, we're trying to help out the people who are making products in America. I'm not talking about products that aren't made in America. Like we can't mine lithium anywhere in like, there's only certain pockets. And like, I'm not saying put tariffs on absolutely everything. This blanket tariff thing is ridiculous. But if it's something that we can make at home, then I do believe there is a reason for reciprocating tariffs and encourage those things to be made onshore and American made.
Why don't we encourage them to make a better product? Why don't we encourage the homemade folks to make a better product so that I want to buy their product versus buying something cheaper?
I think there are national security issues though with the fact that we don't make anything, and that was really shown during COVID. The idea that one country basically makes 90% of our computer chips is so wild. That's the one thing that I think that the Biden administration did that was awesome. They got to get those things back into our country for national security issues.
Can I point out the hypocrisy here? We just had an entire conversation about how the tax code is used as a motivation to encourage people to do what we want them to do, to encourage investors and business owners to do what we want them to do. And now we are arguing.
And we're not saying that's a good thing or a bad thing. That it is what it is.
It is what it is. But now we're arguing that being punitive is a better way to do things. So we've already determined that the way the government, and I believe this is a good thing, the way the government encourages Americans to do the things that they want Americans to do, the things that are good for Americans, the things that are good for our country, the things that are good for our economy, is to encourage it through our tax laws.
Taxes are punitive. That's all they are. There's nothing not punitive about taxes.
So certainly that's true, but there are certainly motivational things. When we get 100% bonus depreciation, that's not punitive. That's an incentive.
It's coming off something that's punitive. So all they're doing is reducing the punitive. But the idea that saying that we don't use the tax code to do punitive things that's all the tax code is punitive.
But that's something that's still going to exist. And so there's incentives on top of those punitive things. And I agree with Mauricio that the right way to do it isn't to basically say it's going to be more expensive to import something and to buy something that's imported, created in another country, and instead say, hey, we're going to provide some incentives to make it cheaper in the US. We're going to provide some incentives to buy it in the US, not we're going to make it cost more if you don't buy it in the US. But let me step back. So
why can't we do both? Why can't we do a little bit,
or do both,
a little bit here and a little bit there?
But why, let me ask you, why do we need incentives? Why does the beef, to your example, Kyle, why does the beef industry need incentives? Why can't they compete?
Because we actually have to pay people. We have to pay people a living wage in this country. You can't compete with China, who's paying pennies and sometimes next to nothing for their labor. How can we compete with those products?
Is that because we are like overtaxing the poor farmers? The poor, is it an overtax issue? Is it we're printing too much money? Is that the issue?
The cost of land, labor,
cost of living, cost of everything is more expensive here.
Okay, so I'm on my fifth shot here. So give me an opportunity to defend Trump for a second. So
are you going to go to your speechwriters?
Wait, I'm sorry. Hold on. Wait, say that. What happened? Say that again.
let me bring my brand of reason here. And I did this on the...
No, I'm with AJ. AJ, we need to get this as a short on YouTube. Start with your hook. Let me say it again, Jay. Say it again. Let me take this opportunity to defend Trump. Can you start with that?
We should totally clip this out of context. We should talk about like one of Trump's like misogynist rants or something, and then just right after put Jay be like, let me take this opportunity to defend Trump.
Give me an opportunity to defend Trump.
Let's be clear. I will never vote for the guy, but that doesn't mean I don't think that he doesn't have any good ideas. So just like I did on the Kamala side, where I tried to bring reason, even though I disagreed with what she was proposing, I tried to bring some reason and nuance to it. I want to do the same thing here. So Trump has proposed 10 to 20% tariffs across the board on all imports. In addition, he proposed a 60% tariff specifically on China. Let's start with the 10 to 20%. That's the thing I'm going to defend. I actually really like that. A small tariff, a small tax on things that are being imported, as long as it's applied across the board on all countries that are exporting to the US, is going to create some competition. A little bit of tax that's going to create, I believe, a good amount of competition for certain countries to say, hey, I can undercut China. I can undercut Japan. I can undercut whoever the incumbent is that's normally delivering those goods to the US. And maybe I have to pay a 10% tax. I don't care about the 10 or 20% tax. I'm going to try and undercut them because I'm being given a level playing field. So I think that tariff across the board isn't necessarily a bad thing, because I think the competition amongst countries to get product into the US, the largest buyer in the world, is going to be enough to ultimately offset that tariff, to offset that tax. There's going to be enough competition that they're going to be willing to lower their margins to offset a 10 or 20% tariff. Where I have an issue is that 60% tariff against China. That's punitive. And the problem there is that there are a lot of goods that come in through China. There are a lot of retailers in the US who rely on Chinese goods. You look at Dollar General, the dollar store, you look at Walmart, you look at Target, and a disproportionate amount of the goods that they buy and sell are Chinese goods. And a 60% tariff that is unilaterally imposed on China is going to drive prices up, because other countries aren't going to be able to compete. They're not going to have any desire to try and compete on price. All they have to do is make it 20% or 30% less than China, and we're still going to buy their goods.
Well, and it's never going to work too, because like we saw it with the gas, right? Like, oh, we can't buy gas from Russia, but we could buy it from China. So what happens? Russia sells their gas to China, and then China sells their gas to us. Like, it would be the exact same thing would happen. Like, if you put such a drastic difference in tariffs between countries, then they're just going to make one extra stop.
Yeah. So long story short, I don't think the 10 to 20, I actually really like, I like Trump's stance on that across the board, 10 to 20% tariffs across all imports. I think that's gonna drive competition. I think ultimately the price is going to get offset by countries being willing to accept lower margins on the sales of those things. And now we're going to have more suppliers of goods. We're going to have
but Jay, how would that change the competition with other countries, because they're getting hit with those tariffs too? So like their relative competition levels not changing at all. It's the exact same as it was before. I guess I don't understand how that's changing.
Plus, you're assuming China has like robust margins, and they can just, I'll just cut less money. I mean, they're what if their margins are super thin and they can barely make a profit, and now suddenly they get slapped with a 40% tariff? They're going to be losing money.
No, but I'm talking about Jay's 10% across the board, saying it'll create more competition. Like if India is producing it at a certain level and Ireland's producing it at a certain level, and all of a sudden they both get hit with a 10% change, like that's a relative, both of them. I don't see anything changing in the competition. They're going to be at the same level playing field.
My point there is that China is going to figure out how to sell those products to us at the same price, because now they are facing the same competition. They're not going to worry about a 10% reduction in margin. They're still going to sell to us at the same price. Plus, we get that 10 to 20% tariff. We're not punitive enough where they have to start raising their prices. China's going to say, I'm not going to let Japan undercut me. I'm not going to let India undercut me. I'm not going to let Taiwan undercut me. I'm going to be willing to.
Why would they undercut them though? I guess that's my point. They have a 10% tariff as well. Like they're just going to have the exact same cost and the exact same issues that China had.
Yeah, but those countries are emerging markets. Those countries are going to be willing to accept lower margins to make an inroads into the U.S. China's not going to do that. They already have inroads into the U.S. They already have those middlemen, the suppliers, the wholesalers. They already have shelf space in the U.S. They don't need to do that. It's when they start seeing competition that they need to do that. And right now we have, I guess this is the thing I didn't point out. Right now, we have outsized tariffs on China. So back from the last administration, we already have very large tariffs on China. The Biden administration didn't reduce those. In fact, the Biden administration is looking at increasing tariffs on China, which I think is a horrible idea. I think we reduce the tariffs on China to 10 to 20% across the board. Don't pick specific products and basically let them compete with other countries. I think at the end of the day, China will figure out how to keep their prices the same, but we're going to still get that 10 to 20% margin without the trade war.
The China thing is pure economic warfare, that all they're looking to do is to kill a competing economy. Nothing else. This doesn't have to do with raising taxes. This doesn't have to do with all it is to try to hurt a competing economy. Nothing.
How does that help the average American when you crush?
It has nothing to do with the average American.
But it hurts the average American.
It hurts the average American, but they're trying to kill the competing economy. That's the only thing.
I agree. But that doesn't help the national interest in helping the people here.
It does in their eyes if long game. That all of a sudden, because let's get it straight. They know the power. If you take the American consumer from China, China doesn't exist. Like, China's GDP is gone. Like, that's how they kill them. So that's the whole idea behind it. I don't agree with it at all. Because it's too late to the game anyways. China's competitive advantage is already going away. We're already shifting products and services and everything away from China. Why? Because they have a rise in the middle class. It's too expensive, and they have low-skilled workers, and they have a lower shrinking worker base. So it's all moving away anyways. We're going to Mexico. We're going to all these other places. It's going to happen anyways. So why go through this whole rigmarole, right?
Because there was a short period of time there. Now that time has passed. There was a short period of time where that's all the entire global news was talking about was, China's on the upswing. The U.S. is going to lose their seat at the head of the table. China's making their run. Oh, the U.S. dollar should move to the yen, yada, yada, yada. And so sometimes, when you're head of the pride and all of a sudden a young lion wants to kind of take a swipe at you, you got to put him back at his place.
But we don't need to worry about it right now. I really don't think we do, because it's a long game anyways. But that's all it is. So now when dealing with the tariffs, right? Tariffs, first of all, are universal. We do them. Everybody does them. It's used as a way to negotiate with countries, to penalize them, all that kind of stuff. When we look at the outside the China thing, which is crazy, I'm not a huge believer in tariffs. Anyways, moving on from that, because we've beat that horse to death. But rightfully so. It's really important. So, but when looking at
very needed horse beating,
yes, that horse needs to be beat, and two is going to be beat repeatedly over the next year. So, trust me.
Yeah, don't clip me saying that and send it to my wife.
Yeah, I was going to say, Kyle would love to have all of his horses beaten and maybe disappearing for a little bit, so he doesn't have to spend as much money on the horses.
Yeah, they're all heavily insured too.
Heavily insured. So the next thing on for Trump's tax plan that we have, a lot of it is solidifying some of the taxes that we're already in. So when we look at his tax plan, we see the expiring individual income tax rates. He wants to make permanent, considering the child tax credit at $5,000, universal expanding to $5,000, which is the universal credit. Other important things that he's put on there is he would like to have the Social Security benefits not be taxed. The tips are exempt, and then which
they both propose that now, AJ, right?
Yeah. Harris now proposes that too.
Trump got a little salty there when Harris reciprocated, said, "Oh, I'm not going to tax tips anymore." He was like, "That was my idea."
Yeah, I love watching the news how they praise Harris for doing it, but when Trump was going to do it, the economy was going to fail.
He got so salty.
What about minimum wage? I know Harris has proposed increasing the federal minimum wage. What about Trump? What's his stance on minimum wage? Has he talked about it?
Official stance, he hasn't put it that I've seen. official stance. He's probably talked about something stupid. I haven't seen an official stance though on lowering the minimum wage. I haven't seen anything on that.
You wouldn't want to do that. You know how many undocumented immigrants probably work at his Mar-a-Lago and other places like that?
I made a comment about this last week because I thought it was fascinating that now there's only 2 candidates, but last time we had this episode, there was Robert Kennedy Jr. was still in the race. I like me. I like to look at the source documents. I like to go to the actual source of the information, so I don't have to rely on the mainstream media, whatever. So I was literally going on Harris's, Robert Kennedy's, and Trump's website, and they all have their policies there, at least the highlights of, even if it's not detailed, except for Harris. If you go to Harris's website, all it is give me money, buy my merchandise, and there's nothing. So everything I talked about on the Harris plan is based on the media that I see, right? But I will give you, I want to, before you, I don't want to cut you off.
You missed at the bottom, Mauricio. There's a little hidden thing that just says, I'm not Trump.
I'm not Trump?
That's her major policy.
For me, I'm not Trump.
I have a pro tip for you guys. Pro tip. If you go to trying to figure out what the position is, if you go to just pull up the Biden plan, which is a general explanation, it's from the Treasury Department, actually. It's 256 pages. General explanation of the administration's fiscal year 2025 revenue proposals. Nobody's going to read 256 pages of that. But if you just download that sucker and pop it into ChatGPT, and you can have a good conversation about, hey, what are the top things? What do they say about this? What do they say about that? Because that's a pro tip, because I did that today and there it is. Just put that into ChatGPT and start having a conversation with it. Like, hey, what are the top, what are they recommending? What are they saying about real estate? What are they saying about this? Just start talking to ChatGPT once you upload that proposal.
Are you sure that's Biden's and not Harris's? Did you see that little mix up?
Harris is basically saying
he literally copied his proposal so much that they forgot to take parts of his name out. There were parts of it that said Biden instead of Harris that they had missed when they were copying it over.
I was literally reading like some of the media's comments on it. I'm like, I don't know if that's accurate or not, if that's an opinion. So I would just literally go in there and say, does this apply to real estate? Is there an exclusion? Is there this? You can literally pepper it with questions, and based on that 256 page document, ChatGPT is going to be your best friend.
Well, and the largest one on that side is, like, from hers, for me, the corporate tax rate.
Yeah.
We would be one of the highest in all of the developed worlds.
28%.
Yeah. That would be.
Well, AJ, when she proposes these other ways that she's going to tax billionaires, then somebody in the room goes, well, if we just tax the billionaires, then they're just going to move all their money over to the corporations and they're going to funnel their money through that. So then they got to be like, okay, well, we got to raise the corporate tax rate then.
And then they're going to raise prices. And she's like, well, we're not going to allow that. And I'm going to set prices. And you're like, what? Like, so the biggest thing of that corporate tax rate for me was shocking. So the 44% effective tax rate, and then the increase in the tax rate as a comparison on a competitiveness, like we were talking about tariffs, how tariffs screw you through other countries, everything else. The corporate tax rate's the same. If a corporation is going to save 10, 15%, they're just going to go incorporate it somewhere else. Like, corporations don't care. That's not how this works. And so, that was shocking to me.
Hold on, AJ. Jay's been trying to interject, but Jay's at that level of drunk right now where he's in between, like, pre-drunk, and now he's drunk, but he's heading towards that time where he gets super talkative and super argumentative. So right now he's in the quiet stage. So I gotta interject. I can tell he wants to say something. He's been trying to interject for a while. So Jay, what have you trying to say?
I just finished my 5th shot. Okay. I'm going to try not to slur
by the way, how many shots are we going to have at Limitless? That's what I want to know.
A lot. I don't drink much anymore either. So a couple shots really does it for me. Let me point out. So I'm not happy with either side. On the Harris side, we've got price gouging legislation, we've got unrealized capital gains, we've got increase in the corporate tax rate. Basically, it's all about overregulation, big government. On the Trump side, he wants to control interest rates. He wants to have a say in interest rates, and he wants to lower them. He wants to in 60% tariffs on China. He wants to deport all the illegal immigrants, which, as somebody who's lived in Florida, and we saw what happened when DeSantis threatened that last year, and everybody left.
Jay, we're sticking to economic topics right now.
No, this is economic. No, so this is literally economic.
Taxes. We're sticking to taxes.
So you no, this is the economic plan. You deport all the illegal immigrants, and basically who's picking your fruit and who's picking your vegetables. And
okay, you can look at any social issue that a politician comes up, and you can spin it into, okay, how's this going to affect the economy? Immigration's not on the docket right now, is what I'm saying.
My point is, if you look at the Harris plan, it's all overregulation. It's government, big government, basically intruding in our lives. You look at the Trump side and it's inflation, inflation, inflation. Both are really bad. Here's my biggest issue. My big issue is that both plans are focused on the revenue side. Harris is focused on taxing.
Neither one of them expenses. I agree.
Exactly. Harris is focused on tax to increase revenue. Trump is focused on tariffs to increase revenue and everything else to increase revenue. Nobody is focused on the problem, which is that from 2017 to 2021, we spent $9 trillion more than we took in. Nobody's focused on the fact that between 2021 and now, we spent $9 trillion more than we took in.
Every 100 days, baby, $1 trillion.
Every 100 days, we're spending $1 trillion. And so nobody's addressing that. Nobody's even talking about the fact that we are spending too much money, which says to me that regardless of whether we figure out a way to raise an extra 100 billion here or 500 billion there, if we're spending $5 or $6 or $7 trillion a year, we're fucked. Excuse my language, but we are fucked.
What would you do though, Jay? Like, balancing the budget's not going to get you elected. So we're in a two-party system.
Trust me. If I thought either candidate had a credible path towards actually balancing the budget, I wouldn't believe either of them if they said it. But if I believed either of them, it would probably be enough to get my vote.
Yeah, but you're the 10% though.
So Trump's plan to lower the budget is to do mass layoffs.
To Elon Musk them.
Yeah. He wants to lay off huge amounts of federal employees. He wants to get rid of divisions. That's his plan.
Well,
and so
millions of people laid off isn't going to be good for the economy. I mean, I need something better than that.
Well, I first of all, I agree with that, but there's no way you reduce the federal budget unless we get rid of the people we have to pay to do the stuff outside the military, which that's a whole other subject, but
you can't talk about that, AJ. We don't want to get canceled. You can't say we're going to reduce the military budget.
Well, no, I would never suggest
AJ,
that.
You're advocating for getting rid of the Department of Education, is what I'm hearing.
Oh, why? Yeah, why do they exist? Holy crap! Send it back to the states. Freaking. No, it's okay because our results have gone so well since they started. You can
Betsy
even
DeVos is going to take care of it, AJ. What are you talking about?
All right. So, anyways, the extension of the tax cuts and the permanent job acts, like Jay said, one's going to raise revenue through tariffs. The other one's raising revenue from, which would essentially be some of the largest, it would be the largest non-war tax increases we've ever seen. And I think that neither one of them have come up with an effective plan to reduce the spending, which that is, I agree, Jay, that's the actual problem here. So it's, I am of starve the beast mentality. The problem is, since they learned what debt was, that doesn't work anymore. And so they learned that really, really quickly. We can do wars, we can do everything. We just get debt. But the rest of the plan, when you look at Donald Trump, the income tax cuts from the job acts, he wants to make permanent. He has lined up. What things do we actually have that he's lined up here? The IRS, $40 billion in taxes from the tips. That was interesting to me.
Does he want to give new kids $6,000? Is that part of his plan or no?
New kids?
Yeah. So Vice President Harris wants to extend the tax credit right, from the 2017 track. But she also wants to give new kids, like if you have a new baby, another $6,000 tax credit. Is Trump?
Can it be retroactive? Can I get it for my old baby who's now 9?
4 babies.
Well, this actually pisses me off, and this is where politics comes in. I mean, there was a bill in the Senate that we've been following for 8 months now, that expands the child tax credit, that restores 100% bonus depreciation. It finally came up for a vote in the Senate, and it didn't pass because of politics. I'm not going to blame the Republicans, because the Democrats would have done the exact same thing. But at the end of the day, it was a bipartisan bill that passed easily through the House, should have passed easily through the Senate, and Republicans didn't vote for it because they didn't want to give
no wins in an election year.
No wins in an election year. And let's be clear, if it had been the other way, obviously the Democrats would not have given the Republicans the win. But it pisses me off that politics has gotten to the point where, like, we're willing to screw the American people in order to not give the other side a win. And so, like, I don't trust anybody for anything.
Mike, so I had one of the big questions I had for you guys was the outside the tariffs, everything else, the one thing on Trump's plan for the Social Security. I haven't decided. I've been trying to argue this both ways in my mind. So not taxing Social Security benefits. First of all, I have a problem with Social Security in general, but not going to get into that. So should we be taxing government money that was from taxes anyways?
No. I mean, putting aside that it's a Ponzi scheme, no, I mean, theoretically, you're putting money into the system, right? It's your money that you're putting in so that you can save for a rainy day. When I take it out, why? It's almost like it's already taxed. It's already taxed going in. When I contribute, why would it not be?
Is it though? I don't think it is.
It's pre-tax.
It's pre-tax. Like, it's taken out of your paycheck pre-tax. So that's the argument, is that money has never been taxed. So it goes in there pre-tax. So on the way out,
it's not a choice, though.
But yeah, I agree with AJ. I would argue
it's not a choice. It's not your money. You don't get
time value of money. I'm losing years and years, decades of time that I could take that money and I could be compounding it, and I'm not compounding it. And so I don't know how anybody would pay for this. I think it's pie in the sky. I don't think it's realistic, but I agree with Trump that this is the right thing to do. I think people that have worked 40, 50 years in this country they paid into the system. They deserve to retire and be able to pay for their basics in life. And so again, I don't know how we make it happen, but I'm all for it.
And for me, the simplest thing was, if I don't have a choice, you don't get to tax it, because it's not my money. I don't even get to see it.
I do get the argument on the other side. Like, if you look at a standard retirement account, so let's just take away, say, Social Security was gone, and we have to go through traditional retirement means. Our income needs to get taxed at some point, right? You could do Roth and do it one way, or you could do it traditional.
Do it or not. The moment you take my choice away, it's no longer my money. You just say it is, but it's not, because I'm
not disagreeing. I'm not disagreeing that, as a form of principle, you shouldn't be doing it. But if you want to take it comparatively economically to other things that are going on, usually income that is derived from working at a business or doing whatever gets taxed once. And in this proposal, you are taking money from that derived work and you're putting it into a system, and then it doesn't get taxed going in and it doesn't get taxed going out. So I understand the concept of it, but yes, should you have to pay tax on it just as a matter of, okay, I don't have a choice, then that's a different discussion.
Yeah. I see the argument. I think though it's a little thick. You know what I mean? It's like, the whole reason we're doing this is that taxpayers don't have to end up paying for this. And it just seems like another way to just get money that we didn't get anyways. You forced it out of me, because the problem I have is, effectively right now, if I did get to keep it, I wouldn't pay taxes.
Well, and it's an illegal Ponzi scheme anyway. And so a Ponzi scheme, you're not going to pay tax on, because you're skirting, it's not even legal.
Exactly. So
anyway, so let's talk about some of the healthcare shit that's coming on. You can see the alcohol kicking in. So Vice President Harris has a couple of interesting healthcare stuff. Number one, continuing the theme of canceling student debt, student loans. Why not? Let's just get rid of them. Blah blah blah. They also want to cancel $7 billion in medical debt. Well, that was an interesting thing. And then they want to allow. I'm not quite sure, AJ. You probably know more about this than I do. They want to allow Medicare and other federal programs to negotiate with drug makers to lower the cost of meds. I mean, can't they do that already? Or okay.
Is that the issue? This is so screwed up.
Yeah.
You're going to get me off all this.
Yeah.
I agree 100% with them. How this works is we subsidize the entire world in two ways. We subsidize them through our military, right? And we also subsidize them through medical costs. Because we create it, and a lot of people don't know this, but we pay more for our own drugs and equipment than other countries do. We actually subsidize the healthcare of other countries. And the driving reason that this happens behind prescriptions is this. The US government is not allowed to negotiate in bulk. So we cannot contract in one contract in bulk with a pharmacy company, but Scotland can. So the pharmacy companies give them ginormous discounts, huge discounts. Because why? They're ordering millions and millions at one time. The United States, we cannot negotiate under one contract. So we pay huge premiums for it. It is ridiculous. It is totally stupid. I understand where the rules came from. I get why. It's just stupid, though. And so we pay way more for our drugs than anyone. We absolutely should be negotiating on one contract and not allowing pharmaceutical companies.
There are other issues too with the patents and with the insurance, the fact medical insurance and insurance that drug companies have to pay for. People are going to sue them, right? Like they can do every disclaimer they want and do all this stuff. People are going to sue them too. And we're a very litigious society. So, yeah. But yes, there are a lot of issues and this is them trying.
But that's what they're talking about. Cause the percentage difference is ginormous on drugs. And the leading driving reason is because of what they're trying to tackle. So what the Harris administration lined up for this, absolutely they need to do. I can't believe no administration has done this or tackled it. She's exactly right on this. And it is so, we're talking, the difference for individuals that have meds that they need, if the US could simply negotiate as one contract, like every other countries could, would reduce it by massive amounts. We could get roughly the same cost as those other countries. I love it.
They're literally saying 40% to 80% lower cost of the meds.
No, Kyle, same drugs. It doesn't. That doesn't matter at all.
But I'm saying the effectiveness of being able to negotiate things like that is only really going to be seen in drugs off patent because
No, it's seen more on drugs on patents because the order size is so much bigger and the premium is bigger that they can give a bigger reduction.
But they don't. But the drug companies aren't going to negotiate as much if their drugs on patent and there's no competition. I guess is what I'm saying. The problem, the patent situation with drug companies is so lucrative that there are generic drug companies that literally they will the people on patent will pay the generic drug companies not to make the drugs. Just so that
was from the Affordable Care Act. So the Affordable Care Act, they extended the patents of drugs so far out. And what the Affordable Care Act did, you can see the moment it was passed, the cost of prescriptions soared because all of these drugs never left generics. They all remained in the hands of the patents. And then they could charge whatever they wanted for, it was like a decade more. It was crazy.
Yeah, so I'm just saying that I feel like that's an issue that still needs to get taken care of too. That if you create a life-saving drug, because what was that Skrinelli or whatever that loser's name was?
That guy's great.
That were basically if you have a monopoly in the market, you could charge whatever you want, right? Like
but let's not forget. I'm a bottle in, so forgive me for defending the pharmaceutical companies, but just remember the old saying that the first pill cost the drug companies $1 billion.
$1 billion.
The second pill cost them 30 cents. So just because you think, hey, why are they charging so much? It's just because the first pill cost them $1 billion to figure out.
Exactly. And that's why I think I'm fine with the patents. The Affordable Care Act's extension of patents was simply a give me, though, to pharmaceutical companies to get higher profit margins for longer so that they would back the Affordable Care Act. So that's where that came from. And that was wrong. But pharmaceutical companies, people think, why don't they just charge it cheaper? Mauricio, you're exactly right. The cost to develop these drugs are so astronomical. And that's why almost all of them are developed where? In the US of A, because we will invest in it because they can get a return.
And that's why when you say we're subsidizing the drugs for the rest of the world, that's why, because we're putting it all, we're creating pill number one. We're patient zero.
We're patient zero. And so we subsidize the medical cost for these countries in an astronomical way, both on the government side, the contracting side. I mean, it's really bad. So I'm glad that the Harris administration at least addressed it and said, the one thing we can do, though, is lower these massive costs by simply allowing the government to negotiate under one contract. No brainer.
AJ, what about this price controls issue?
Oh, don't, Mauricio, why would you do that?
Thank you, Mauricio.
I gave you the chance. Wait. I gave you the chance. I gave you the chance
to do it.
We all know his position on it.
Kyle, I gave you the chance. I gave you the chance to give up, and you said, no, we'll split this up in 2 episodes. So I'm like, I'm going with it.
That's right. Okay, so let's talk about it.
Because the Harris administration says, AJ, the Harris administration says this is the first ever federal ban on price gouging on food. So why is that a bad idea? Why is it bad for the government to prohibit food companies from gouging us in their food prices?
Because the word gouge implies that they are making out at bandits at our expense, which is not what's happening. In fact, you can actually see the margins of these companies went down while their prices went up. So the cost that we all felt rise, especially in some of these higher costs, that is all passed through. So just because they're charging more doesn't mean they're price gouging. Price fixing has never worked in any economy when it comes to foods or anything else like that. Every time it's failed. The reason being is nobody will invest in it anymore. Why? Because you can't charge, and if anything goes wrong, you're done. And so, you're talking about food here, crops. These aren't tech companies. These people don't have 60% margins. These are subsidized, we're trying to keep alive industries. And so when you look at it, in these margins that they have, gouging would imply that they're doubling their profits. They're tripling it while we're all paying more. That's not even what's happening, though. So the premise of gouging is a word that is a political word that they're using, but it's not gouging if you're rising prices because the price of everything's rising. They're using it to attack and blame the dairy farmers, everybody else, so that they don't take responsibility because they put $25 trillion into the economy. And that's what lifted prices. And so instead they're blaming it on these companies.
Let's be realistic. They are throwing crap at the wall and they're seeing what sticks. At the end of the day, I mean, she started with, we're going to pass legislation to avoid price gouging. And then most recently, I think in the last day or two, it's been changed to, we're basically going to implement the same rules the states have implemented. Basically, she's seeing what resonates with her typical voter so that she can figure out where to land on this. I wouldn't put any stock in anything that we're hearing, but let's look at it this way. Giving her the biggest benefit of the doubt, and I'm not doing that because at the end of the day, I think we have no idea what she's going to do, but giving her the biggest benefit of the doubt, we have 39 states that support price gouging legislation out of 50 states. So 80% of states, 78% of states support price gouging legislation. What she's saying, and again, I'm not saying we necessarily take her at her word because her word's changed, but if you take her at her word, basically she's doing what 80% of the states are doing anyway. If you look at the dairy industry, we talked about the dairy industry earlier. Actually, the dairy industry is one industry in the US where we actually have price fixing by the government. Since the 1930s, the government has said, here is the minimum price you can charge for dairy. It's crazy. I didn't know this until last week. But with all this price gouging stuff, I started doing some research and I found out there's some law based in the 1930s that say the dairy industry has to charge this minimum amount for dairy to ensure that they make this certain profit margin. And so it's we don't know what her stance is on all of this. Best case, she wants to do what all the other states are doing with price gouging. She wants to make sure that there's no price gouging. I think that's a good thing. Worst case, she actually wants to set prices at some central location. The government wants to set prices, which again, I said I wasn't going to use the word communist or socialist, but that's a decent step in the direction of socialism.
Wow, I thought I was going to have to worry about AJ going there, but you just took it off his hands.
But let's be clear. We do a lot of things in this country that are a step towards socialism. So I'm not saying that's necessarily out of character for what we do in this country. But it's another example of if the government is saying we are going to define ranges of prices for certain products, that's a bad thing. That said, I don't really believe that any of this is something that she's thought through. I think she threw something out.
How long has she had the job for?
That's the problem.
But she hasn't had the job. She's had the job of vice president. You look at and
no, but what I'm saying for like, how long is she like? So this is her plan, right? You're telling me that she's had the job for a couple weeks and she's put together an entire economic plan and had time to also campaign and try and get elected.
And that's the point. She hasn't put together anything. She's throwing stuff out there. She's seeing what resonates with people. She's seeing what doesn't resonate, and she's going to change. And let's be clear, the other side, Trump, is doing the exact same thing. I don't blame either of them. At this point, it's become, we're not trying to solve the world's problems. We're trying to get elected. And both sides are doing the exact same thing, which is we're going to say whatever the hell we need to say to get people to vote for us. And it pisses me off on both sides because we have no idea what either side is really going to do when they get into office.
Well, yes, but we also do have to take them at their word, just like we take Trump at his word that if he's going to say, because right now we don't have anything else to go off. So if he's saying, I'm going to impose a 60% tariff on China, that's why we're talking about it.
I don't take him at his word on that because I don't think that I think at the end of the day, Trump is smart enough to know that he's going to throw out something extreme as a first negotiating principle. And then the people that are surrounding him are going to say, this is ridiculous. We're not going to let you do it. And she's going to do the same thing.
I understand that. The problem, though, is if we're going to just take that approach, there's no reason to talk about anything. We should just not even talk about it.
And I honestly, I hate to say it, but I think at the end of the day, we have to discount everything both sides says. And we have to look at.
But to I guess to AJ's point, to AJ's point, though, like just because not all of this is going to pass, it is an indication of what they're going to try and get done and where they're going to be leaning and how that's going to affect our economy. And just because, okay, Trump's saying I'm going to put in a 60% tariff, that's not going to, he's never going to get that across. But is he going to try and do something similar or try and get something?
It tells us where his head's at, what he's trying to accomplish, where he's going. So I think that, price gouging, this idea of price gouging, centralizing control, it goes along with their other statement about patents, where she's like, we can just take a corporation's patents. And they were like, you can do that? And she's like, yeah, and I will. And it shows us where their heads are at, right? And so it's like their economic plans are very, very different, right? One of them, very stupid in one way, another one very stupid the other way, but that's what we're trying to understand, and that's why we talk about it. Why are these ideas bad ideas or good ideas? Harris's plan to centrally negotiate to control prices on pharmaceuticals for Medicaid, Medicare, that's awesome, right? Like that's a really good use of government power. They're not fixing prices. All they're doing is collectively bargaining on behalf of the states to get lower reduction prices. Amazing. Now, centralizing cost fixing, though, for private markets is crazy. And we shouldn't be doing that, right? And so I think it shows us, though, once again, where their heads are at and what they're doing. And obviously, we got to talk about it, or no reason to have.
Yeah, and I want to mention a specific quote that when I was researching this, because I think it does reflect a misunderstanding of what a lot of people have about inflation, and it kind of ties to our discussion about inflation. But she had a quote that said, in terms of this, like proposing the limit on price gouging, she said that she wanted to defeat inflation and bring consumer prices rapidly down. And I think there's this misunderstanding that when inflation comes down, that somehow prices. Jay's like about to lose it a bit. But there's this misunderstanding that when inflation comes down, that somehow prices come down. And that's not true. All it means is the rate of increase of those prices. So even if you got inflation down to zero, which is not even, I mean, the Fed's trying to get the inflation down to 2%. Even if you got inflation down to 0%, no more inflation, that does not mean that prices are going to go back to the original baseline. It just means that they're going to stay where they're at. In order for you to get prices down to wherever they were 2, 3, 4, 5 years ago, you would actually need deflationary factors, not just a decrease in inflation. And that's just something I wanted to point out, because it really stood out to me like a sore thumb, that in order to defeat inflation, we wanted to bring back prices, consumer prices, down to where they were before. That's not going to happen.
But I also think it's just a play off of, like, when inflation was bad, there's this rhetoric that went around the media that was completely proven false, but people still latched onto it, that the reason we have inflation is because of corporate greed. And like when you took surveys and people, like the results of surveys, the common people, like corporate greed was top 2 reasons for why inflation was so bad. And even though, like,
percentage of the population still believes that.
Right. And so I think that's just, you take a look at that and you're like, oh, that's a third of the population that if I put out a policy that taps into corporate greed, they're going to be like, oh, maybe I'll vote for her, or they're going to get rid of these greedy corporate types.
But I also want to make the point that there is a difference between a company raising prices because there's an increase in demand, right? And because of that, you increase prices, versus like these predatory practices. During crises, whether it's a hurricane, whether it's an earthquake, there's some things. COVID is a good example. Like, and again, we can argue that part, whether that's even good or bad, but there's a difference between people making more profit or more revenue. Actually, let's talk about profit versus revenue because of increased demand versus taking advantage of some crisis that's going on. That's a big difference.
They should definitely put price limits on toilet paper. I will say that.
Yeah, we don't want to run out of that. So I was talking to somebody because I was like, I had a problem with these price increases that were that big. And I was like, obviously during COVID, things like that, we have like national security time. Well, maybe that should be taken into place. And then the question presented was, how do you expect me to increase production by 100 times when I have a 10% margin? And that was the underlying question. And I thought, okay, that's a good point. So what is the role, and should they be fixing prices at all? And that's even during, like, we're talking about normal time. We're not talking about like COVID time or anything else.
Do we want to just wrap this up? It's Jay's falling asleep.
I'm not falling asleep. I'm just
let's do this. Listen, I don't want to interrupt, but like Jay seems like he's falling asleep. We should probably wrap it up to the top 10.
I'm not falling asleep. I'm just drunk.
He's just drunk. I'm sorry. Jay's drunk. Maybe we should just move on to the top 10 or skip the top 10 because you know how much I love the top 10.
These guys over 50, AJ, like they just can't keep up. They hit the hour and a half mark and they're just out.
They're done.
Can we just zoom in on Jay's face? Like just zoom in on what we're looking at right now.
Oh my God. My wife is going to be so annoyed at me tonight.
Let me see that bottle. Let's hold the bottle up. How much of a dent did you put in there?
I did a serious dent.
That's pretty. I take back my comments about your little ice ball thing.
I've had at least 5 or 6 real decent shots.
I've been drinking this 4.5% delicious clear RTDs, and there's no way I could get as close as you with that straight liquor.
I literally I don't drink. I rarely ever drink anymore, and I am so bombed right now.
So just to make one quick comment before we move on to the top 10. So when half of this group got together live, which was Jay and I back at the Best Ever conference, we polished off a couple bottles of wine before the show. We were lit. I could only imagine what it's going to look like when the four of us get together, except for AJ, of course. AJ is going to be, well, maybe AJ will drink some of that clear crap that you have. But like literally, it's going to be.
He will literally be the designated driver. He's going to walk us up to our rooms.
I mean, we could trick him. It does say water on it.
There's no taste to it. There's no taste to
This
it.
water tastes weird.
That was water. It's a cucumber water, because that's really what it does taste like. All right, like I don't even feel like we have to do it. Actually, how much you guys getting paid to speak at Limitless?
Zero.
Like,
25 grand.
I think mine was just right around there, 50, something like that.
Yeah, I think 25K.
Because I saw an article the other day where it was like what is the highest paid public speakers in the world?
Wait a second. Are we going into the top 10 now?
Yes, isn't that what you just said we're doing?
Well, wait a second. But we have to end the segment.
We just ended it.
We ended it.
Oh no. So, sorry. Let's do that again. We're coming in at 209.55.
Why are you stopping
No,
this?
No. We ended it. Jay,
No,
we ended
because
it.
I didn't feel like we
stop
ended
talking. You're done. We're cutting you
Jay,
off.
we
You
ended
have
it.
starting.
no
Okay, but
insight
we're
into
coming
this.
in now. Go.
No, we're not coming in. We had a whole thing where we talked about how drunk you were, and that was our segue into the
That was
top
our
10.
segue. You're done. That was it.
You're done. We're good. We came back in. We talked about how we're just going to go straight to the top 10 because you're drunk. Done. Okay. Highest paid speakers in the world. So actually, I have an article from 2023, and I'm only going to list 5. And it's just the people in 2023. It was only the 2023 speakers. And so it goes through the usual suspects. Tony Robbins, how much do you think his speaker fee is?
I don't think he's high on the list. I mean, I know he's a very sought after speaker, but I don't think he's above what most people charge. But I think the top guys get paid a couple $100,000.
Tony Robbins, 300,000.
Yep.
Barack Obama, right around the same, 200 to 400,000.
Wait.
Hillary Clinton?
So is Tony Robbins like the top guy?
Well, so like yes, he's up there. I mean, he's like tied for, if not that, but that was just in 2023. That's not
Is
in
this
history.
Is this just for speaking gigs? Because like if I
Yes.
want to get some like singer, if I want Taylor Swift to show up to my event,
This is just to like keynote a conference.
got it. Okay.
This is a conference keynote, and this was only ones that happened in 2023, because I'm going to jump back to historically. Barack Obama, 200 to 400,000. Hillary Clinton, 200,000. Richard Branson, 100,000, and Gary Vaynerchuk, about 100,000 as well.
I was going to say Gary V's got to be up there because But
Yeah.
you know, all these guys like Ed Milet and Patrick Bet-David, they charge a pretty good premium.
Now, that was just in 2023. If you want to go in history, I bet you can guess who the number one for a single event, the highest paid person was.
Adjusted for inflation,
No, just straight up.
so like Abraham Lincoln wouldn't count.
Well, so actually, it's a decent question because one of them on here was from 1989.
Boy George Michael.
Number one, Donald Trump got paid $1.5 million for a 1 hour speaking gig in 2006 and 2007 at the Real Estate Wealth Expo. That was number one. Ronald Reagan got paid $1 million 1989 for the Fuji Sankei Communications Group in Japan.
Wow.
Tony Blair
Yep.
once got $616,000.
Wow.
Bill Clinton once got $450,000, and rounding up the top 5, Rudy Giuliani got paid just over $300,000. So
Yeah, I saw one of his speeches too. Yeah, interesting.
I don't think he's commanding that much anymore.
No, he's
Unless
commanding-
he's speaking at Four Seasons Landscaping.
Yeah, well, that's down the street from me, by the way. I could go drive by that if you guys want.
I saw Giuliani the other day at the Sheraton 4 Points. I think he charged $600.
He charges 2 beers and a over the pants hand rub. Okay, you guys want to plug anything?
I'm done. Come to Limitless and check us out and watch our presentations, watch our our podcast and come say hi.
And if anyone who's made it this far, please just reach out to Jay and on his Instagram or something and just make a comment to him. Laugh at him, do whatever you want, because this is the drunkest I've seen Jay on this thing.
I will probably send you a book.
AJ, what do you got?
Yeah, Limitless. Come check us out. I think if you're around, it's in Texas, so it's in Dallas. We'd love to meet everybody, and you can let us know how we do at keeping drunk Jay in line, and if we're handling it appropriately or not.
AJ will buy your first beer. Mauricio.
Yeah, come to Limitless. I don't know. We'll be promoting a bunch of stuff, but come there and bring us gifts, bring us booze. We'll get Jay drunk even further. And once we figure out our shenanigans, I know it's going to be Thursday night. Let's just, after the party, it's going to be Thursday night. We're going to be recording somewhere live, probably in AJ's suite, presidential suite that he always gets. But yeah, come join us.
All right. Yeah, I echo the Limitless thing. There's going to be next week, actually. Since we are recording at Limitless, it's going to be a pre-recorded episode. We're going to do it live, but then we're going to release it next week at the normal time on Wednesday. So in the normal slot that we normally record in, Tuesdays, 7 Eastern, 4 Pacific, we're actually doing our live fantasy football draft, which I expect all of you are going to be there. We're going to drink as well. We're going to have a good time there. So we're going to figure out how to live stream that. I'm saying that right now, Jay.
Done.
Okay. All right. That's it. You guys want to hang out longer? Or
No, longest episode yet.
Want to do a shot with me, Jay? I'll do one with you.
I'm up to 6.
I'm gonna have to text Carol. Sorry, after this. All right. Well, my drink has been gone for a while. I didn't have a full bottle like Jay, so I got to go hit the head. But I will see you next Thursday.
See you next Thursday.
See ya.
Yeah.